Hey everyone, welcome back to the channel. Today we're diving deep into one of the most talked about, most hated, and most volatile stocks on the market right now. New Fortress Energy, ticker NFE. As of November 21st, 2025, the stock is trading around $1.50 to $1.80 after a wild 20 to 50% after hours move yesterday on a credit facility amendment and forbearance news. Retail is screaming short squeeze, bears are screaming imminent bankruptcy, and the borrow rate is through the roof. We're going to do real due diligence, what the company actually does, the massive debt problem, the latest news from the last 48 hours, the short thesis, the squeeze thesis, and whether this is a 10 bagger turnaround or a zero. Let's get into it. First, quick background so we're all on the same page. New Fortress Energy was founded in 2014 by Wes Edens. Yes, the same guy who owns the Milwaukee Bucks and Aston Villa. The vision was simple but ambitious: build LNG import terminals, power plants, and shipping logistics super fast in emerging markets that desperately need cleaner, cheaper energy. They've built terminals and power plants in Jamaica, now sold, Puerto Rico, Mexico, Brazil, Nicaragua, and have floating LNG projects. Core business: sell LNG, convert it to power, and get paid on long term contracts, often in US dollars from governments or utilities. At its peak in 2021 2022, the stock hit over $60 because the story was incredible: 10 to 15-year take or pay contracts, huge embedded growth from Brazil power plants, hydrogen and zero division data center power deals, the whole thing. Then everything that could go wrong did. Here's the bear case in a nutshell, and it's a strong one. NFE has roughly $9 billion of total debt against a $350 to $450 million equity market cap. That's insane leverage, over 20 times in some calculations. They aggressively build projects with corporate level debt instead of project finance. Then delays hit everywhere. Brazil power plants late, Puerto Rico contracts stalled, floating LNG 1 and 2 behind schedule, Jamaica assets sold at a loss relative to expectations. Cash burn has been brutal. They've been selling assets. Jamaica went for about 1.05 billion earlier this year, raising equity at terrible prices, and now they've missed interest payments. Latest bombshell: November 17th to 20th, 2025. They missed a $30+ million interest payment on their 2029 notes, entered a forbearance agreement pushing the payment to December 15th, signed an 11th amendment on their credit facility extending maturity to March 2026 and giving covenant holidays. Fitch downgraded them to restricted default. Liquidity is razor thin. Estimates put unrestricted cash under 300 million after using the Jamaica proceeds. If they can't refinance or restructure by December early 2026, Chapter 11 or a UK scheme of arrangement is very real. Equity could be wiped or massively diluted. That's why the stock went from over $40 in 2023 to under a dollar earlier this month. The bear case is simple: too much debt, not enough cash, execution risk equals potential zero. Now, the other side, and it's not crazy, the assets are real and generating cash. Brazil CLBR 2 624 megawatts just achieved first fire and is close to commercial operation. Porto and other plants coming online 2026. Analysts think Brazil alone could be 30 to 40% of EBITDA in 2026 2027. Puerto Rico still negotiating a massive 20-year LNG to power deal. If signed, it's hundreds of millions in annual EBITDA. Floating LNG 1 is operating in Altamira, Mexico. Floating LNG 2 under construction. Long-term contracts are investment grade or government backed, often 10 to 20 years. 2025 guidance still standing was 1.25 to 1.5 billion EBITDA plus gains. Even if you haircut that heavily, the assets are worth way more than the current enterprise value if they can push debt down to the project level. Management is actively deleveraging, sold Jamaica, looking at more non-core sales, shifting to asset level financing. Wes Edens and insiders own over 50% of the company. Huge skin in the game. Analyst price targets are still $4 to $18, average around 7 to 8, implying 4 to 10 times from here even after the crash. Some bulls argue the equity is mispriced relative to a bond like recovery value. This is why retail is going nuts right now. Latest data as of mid November 2025: short interest around 60 million shares. That's 45 to 55% of the float depending on the source. Days to cover 8 to 12 plus on normal volume. Borrow rate 80 to over 100% annualized in spots. Shares extremely hard to locate, many days zero available. Cost to borrow has spiked repeatedly. The float is tiny because insiders and institutions own the majority. When volume hits like the last 2 days, over 100 million shares traded, price rips violently. We've seen 30 to 50% moves in a single day multiple times this month on relatively small news. CLB a first fire. Forbearance credit amendment. Yesterday's after hours 20 to 50% pop on the 11th amendment, and forbearance extension is classic distressed short squeeze fuel. Reddit stock twits and X are on fire with NFE posts. Sentiment flipped from dead money to next BYND, Wolf or SGBX overnight. When distressed stocks flip narrative, the short covering can be explosive because no one wants to be the last short in a potential restructuring where equity survives. But let's be very clear, this is one of the riskiest stocks on the market. December 15th is the new drop dead date for the missed interest payment. If they can't reach a comprehensive restructuring, equity gets crushed. Dilution is almost guaranteed in any deal. Volatility is insane. 20 to 50% daily moves both ways. This is not a blue chip, it's a binary event driven distressed situation with massive asymmetric upside if they pull off the turnaround. But real bankruptcy risk. So, where do we stand November 21st, 2025? NFE is the ultimate high risk, high reward play right now. Bears are right about the balance sheet horror show. Bulls are right that the assets and contracts are worth billions if refinanced properly. Retail is right that the short setup is nuclear. One good headline and this can rip $3 to $5 plus fast. My personal take, I'm watching very closely but position sizing tiny. Any Puerto Rico contract announcement, Brazil commercial operation date, or comprehensive restructuring deal could send this flying. Failure by mid December could send it sub $1 or worse. If you play it, use extreme risk management. This can go to $10 or zero in 2026. What do you think? Dead cat bounce or the next legendary squeeze and turnaround? Drop your thoughts in the comments below. Smash the like button if you found this helpful, and subscribe for more distressed and squeeze plays. I'll update the second anything major breaks. Thanks for watching. Trade safe.